one of the traps I think that firms can find themselves in the institutional world of investing is, I think, the desire to slice and dice philosophies into certain little style boxes. And as I had mentioned, where we're seeing the most attractive investment opportunity isn't necessarily within those companies in our portfolio or that are just on the periphery of our portfolio. You wouldn't consider those the most dynamic growth companies currently. We still think they're growth companies, but they may not be growing consistently at 20%. Those even with this recent correction, those are selling for 30, 40, 50 times earnings. And the market has recognized those. So again, it's this recognition that while we are, when you look at our companies, that's a good question, by the way. When you look at our companies and you just looked at the names of our companies, you would think, okay, these are larger cap companies and they're growth companies. There's a couple in there that, whatever, they've kind of stumbled recently, but they're growth companies. If you looked at our portfolio just on the metrics of valuation, our portfolio by design, we hope we can build them at a discount to the S&P and a significant discount to, say, the Russell 1000 growth. And you would think, well, maybe it's a core or a blend. But that's where the valuation comes in. So I think we are generalists in the sense that if the market environment is not allowing or providing great, terrific, recognized growth companies at great valuations or even reasonable valuations, we move on. And so what we might then be trafficking in, studying, are companies that we still think are going to be at least double-digit growth companies for the next 3 to 5 years. The growth may be lumpy, or there's something going on at that company that they're going through some type of company-specific dynamic where growth has stalled, and we're confident that management can restart it through a number of different initiatives, company-specific initiatives, but the valuation is so cheap that the market has basically given up on them. That's what we're seeing today, as we just enter May of 2014. Mr. Market is being very, very stingy these days.